Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday, the 14th of August here in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, UBS reports blockbuster results as profits beat estimates and inflows hit $27 billion.
Goldman Sachs and JP Morgan say markets are now pricing in higher odds of a US recession.
Plus, the letter of the law. US authorities consider a push to break up Alphabet's Google after a landmark competition ruling.
Let's start with a roundup of our top stories.
The Swiss banking giant UBS has reported double the profits expected in the second quarter. Net income at the bank came in at $1.1 billion versus estimates of $520 million. UBS's key wealth management business saw strong client inflows with $27 billion in net new assets in the period. A year after completing the takeover of Credit Suisse, the bank says it's on track for pre-merger levels of profitability. But UBS also says it expects to book another $1.1 billion in integration-related expenses in the third quarter. It's still planning up to $1 billion in share buybacks this year.
Wall Street banks JP Morgan and Goldman Sachs say that the markets are pricing in higher odds of a US recession. The calculations come in the wake of a sell-off which briefly sparked fears across markets last week. Beata Manthi, equity strategist at Citigroup, agrees. She says the evidence is pointing towards an economic downturn.
So we indeed, one of few brokers, we have a recession penciled in for this and next quarter out of the US. So we think the slowdown in the data is much stronger than it looks like.
Citigroup's Beata Manthi there speaking to Bloomberg Radio. Goldman Sachs says that together equity and bond markets are seeing a 41% probability of a US recession. That's up from 29% in April. The jump is being driven by market wagers on a more aggressive pace of rate cuts from the Fed and the lagging performance of stocks. JP Morgan has a similar model. Meanwhile, the Atlanta Fed president, Raphael Bostic, says that he's still looking for a little more data before supporting a reduction in interest rates from the US central bank.
The former JP Morgan strategist whose departure sent shockwaves across Wall Street has resurfaced on social media. It's the first time we've heard from Marko Kolanovic since his exit in July. Bloomberg's Tiwa Adebayo has the story.
Once hailed as one of Wall Street's last remaining bears, Marko Kolanovic made his name with stark warnings about stock slumps and volatility blow-ups.
Sort of below 2050, call it 2030 to 2050 range. And why I'm mentioning that range? Because basically at that point, momentum turns negative. And at that point, also option positioning will result into some outflows from equities.
Kolanovic there speaking to Bloomberg back in 2018. But when his more recent pessimistic views failed to materialise, the strategist once called Gandalf parted ways with JP Morgan after 19 years. The abrupt change led many investors to wonder if his exit foreshadowed a market top, comparing him to Charles Clough, who famously left Merrill Lynch in 1999 after maintaining his bearish stance before the dot-com bubble pop. Now, Kolanovic is back, armed with a fresh social media handle and a new downbeat take predicting increasing bankruptcies and credit card delinquencies. In London, Tiwa Adebayo, Bloomberg Radio.
The Justice Department is considering a breakup of Alphabet's Google. We're told that it's one of the options being looked at after a federal court found Google monopolised the online search market. Here is Bloomberg's antitrust reporter, Leah Nyland.
The Justice Department is supposed to come up with a plan for how it would resolve the alleged illegal conduct by Google. Last week, a federal judge found that they had monopolized the markets for online search and also search text ads. Those are the ones that appear at the top of the search results whenever you Google for something. And so the Justice Department is mulling a bunch of possibilities, but sources tell us that a breakup is definitely on the table.
Bloomberg's Leah Nyland. The move would be Washington's first attempt at dismantling a company for illegal monopolization since efforts to break up Microsoft 2 decades ago. Shares of Apple were down as much as 2% in late trading.
Ukraine's President Volodymyr Zelenskiy has tasked his top commander with working on next steps as the army continues its incursion into Russian territory. The surprise military offensive has changed the narrative around the war, which some had seen ending in Ukraine's inevitable loss. Now, 3 people close to Russia's defence ministry tell Bloomberg the Kremlin is struggling to recruit enough new fighters. The sources say regional officials are missing more than a third of their recruitment quotas. Russia's President Vladimir Putin has vowed to secure his country's borders. Ukraine's Foreign Ministry spokesperson Georgy Tikhy says they're not interested in keeping the land.
Ukraine controls about 1,000 square kilometres in this operation. I can also emphasise here that unlike Russia, Ukraine does not need other people's territory. Ukraine is not interested in taking over the territory of the Kursk region, but we want to protect the lives of our people.
Georgy Tikhy from the Ukraine Foreign Ministry there. Western allies have so far given their blessing to the use of donated weapons inside Russian territory.
The US has approved the sale of up to 50 F-15 fighter jets to Israel in a deal valued at more than $20 billion. The pact sends a message that weapons will continue to flow to the state even as it continues its war in Gaza. The Boeing jets are not expected to be delivered to Israel until 2029 at the earliest. Senior fellow at the Carnegie Endowment for International Peace, Aaron David Miller, says that the region is now at risk of falling into a multi-front war.
At some point, the Iranians and Hezbollah are going to respond. The only hope to avert a major escalation is a ceasefire deal, and I just don't see it coming together right now.
Aaron David Miller there, a former Middle East peace negotiator for the US. He added his best hope was that by November there could be a 6-week ceasefire. The war in the Middle East has increasingly weighed in US electoral politics, with Republicans accusing the government of not doing enough to help Israel.
Suspected attempts by Iranian hackers to infiltrate US presidential campaigns have touched off a widening federal investigation into election interference. Investigators believe that attackers tied to Iran hacked into Republican nominee Donald Trump's campaign and gained access to internal documents. Sources who spoke to Bloomberg also say the intruders tried to breach the campaigns of Vice President Kamala Harris and President Joe Biden. However, it's unclear if those attempts succeeded. In a moment, we'll bring you more details on those results from UBS, plus look ahead to today's US inflation data. But just a word on another story that caught our eye this morning. Bloomberg City Lab columnist Julia Hobsbawm has been writing about Manchester having a moment. And this is partly about the power of local government, a very hot debate here in the UK, particularly when it comes to planning, for example, but also about the ambitions for the city to become a 15-minute city, you know, improved transport, more walking involved, building more houses, redeveloping offices.
I think the interplay between the Metro mayors in the UK, including Andy Burnham, you know, in charge of Manchester and surrounding areas, and the Labour government, obviously a lot of the the majority of the Metro mayors are now also Labour leading, is going to be so interesting. And Julie, I think writing about Manchester is also kind of fascinating. I mean, when we were up there for the political party conference season up in Manchester, that feeling of kind of regeneration and rebirth was really evident, and the 15-minute city was absolutely at the forefront of people's minds. So I really like the column that she's written, of course, for Bloomberg City Lab, when home building is such a hot button issue.
Well, let's go to our top story now, and those second quarter results from UBS. Analysts had been focused on performance of the wealth management division and how quickly the Swiss bank is winding down its non-core legacy unit. We've got our EMEA managing editor for finance and investing, Tom Metcalf, with us for more. Morning, Tom. Just take us through the headline numbers from UBS. How did the bank perform in this quarter?
Yeah, good morning. Look, at first blush, this looks like a pretty solid set of results. I mean, the number that stands out for me is in that key wealth management business. So they had $27 billion of inflows, client inflows. And that is a very strong sign of people, you know, buying into the franchise. And obviously those are the core clients for UBS, you know, very, very rich people. It's the place where they want to put their money. So that's very strong. And, you know, it's hard to... You know, so the profit really beat estimates, but it's a bit difficult to unpick that in terms of, you know, the operational side, because basically what's happened is Credit Suisse is fully integrated. So, you know, you will see jumps in revenue and stuff like that. But the other thing that they're trying to integrate is obviously Credit Suisse, and the fact that they've managed to, I think, cut their legacy or non-core assets by something like 42% since the year before, goes to speak, I think, to, you know, this message that, hey, we are integrating, we are moving forward. And certainly as I look at the, you know, these results as they come out, it does look like they are just executing on that. And it's probably what shareholders really want to see. They want to see, you know, clients coming in, and also they want to make sure that Credit Suisse business is incorporated and effectively starts to deliver, like the UBS UBS business has.
Yeah, that's very interesting, isn't it? What's the bank also saying then about the future and about the third quarter?
Yeah, it's a few interesting signs. Look, like most bankers, it's saying, hey, we expect volatility in the third quarter. Now, look, that might not necessarily be bad news for banks like UBS. Their equities traders, for example, did fantastically well this quarter, and that's normally helped by volatility. One of the things they did say was they are continuing to see clients kind of shift, as you'd expect, into higher interest products. So that may well put pressure on the margins. But, then again, when you've got $27 billion coming in, you can probably find ways to still make money.
On the Credit Suisse point, as you say, integration progressing, although another $1.1 billion of expenses being flagged in the third quarter as well. Where is UBS in this process?
Yeah, it seems like they're on track. I mean, I think they've sort of guided this year very much one of those years of bringing the IT systems together, bringing all the legal things into one, and that does involve a lot of costs. I think what they're doing a good job of is very well flagging what those costs are going to be. So that 1.1 billion you mentioned, that won't hopefully come as a surprise to people next quarter thus. And for me, it just seems like so far a solid execution story. And I think, I know we've got Amotti coming on TV, the CEO of UBS, in a bit, and I'm sure he'll be probably striking quite a sort of ebullient tone. Yeah,
absolutely. Fully across the schedule then for this morning. In terms of the buyback, how important a story is that amidst all of this? I mean, as you say, quite rosy news.
Yeah, exactly. So they're sort of reaffirming what they said last quarter. Look, we will do this 1 billion sort of buyback this year, and they've said we'll look to do about 2 billion by the end of next. So again, that message, hey, we're on track, that we're trying to make no surprises here. And that was interesting for me that, this buyback had been well communicated, but there was chatter sort of among analysts, among shareholders, hey, are they going to sort of give us some comfort around that? Because obviously what we've seen in recent months is this real ding-dong with the Swiss regulators.
Yes.
Where the Swiss regulators saying, hey, maybe you need to put up more capital, and we're talking like, billions. I think some of the ranges given go as high as 25 billion, which would be very drastic. So it'll be fascinating to see how that plays out. I've only been able to sort of scan the results. I didn't see any mention of that, which is probably good tactics from UBS, right? Like keep a low profile and hopefully resolve all that behind closed doors.
OK, Tom Metcalf, our EMEA Managing Editor for Finance and Investing. Thank you.
Now, the Atlanta Fed President Raphael Bostic has said that he's looking for a little more data before supporting a reduction in interest rates. This ahead of today's US CPI print for July. Bloomberg Economics expects a headline reading of 2.9%, a slight slowdown from June's reading. Our executive editor for Asia Markets, Paul Dobson, joins us now for more on this. Paul, good morning. Good to have you with us. What are the expectations then for the CPI print, which comes after, of course, that softer producer price inflation data that came out yesterday?
The way that you just phrased it is right. The market was already looking for a slowdown in CPI in the data even before we got the PPI figures yesterday, and that will only have given people more firm conviction that the likelihood is that it will be a number on the softer side, and that should give people more encouragement that the Fed will be able to move closer to cutting interest rates in the near future. I think that what was interesting in the PPI numbers wasn't just that the headline number was below expectations, but also some of the input statistics, particularly the ones that the Fed concentrates on when it's thinking about its own favourite inflation measure. The core measures of CPI and the core PCE in particular were also lower. So basically the market took some encouragement from that. We saw on the one hand lower treasury yields and also a weaker dollar as a consequence of that, and equities on the other hand liked it, pushing higher across the board.
On the question of the risks of a US recession, we've seen Goldman and JP Morgan, looking at in their models at increased probability of that happening. How do those perceptions feed into markets? The CPI print, of course, being part of that. And in Asia, where you are, where some of the greatest turmoil was seen in the last week.
The question here is whether the Fed can engineer a soft landing or whether the economy is slowing faster than it expected and it's going to be something more ugly when we hit the ground. So far, the market is probably pricing in the more benevolent of those scenarios. It is looking for, the Fed to kick off cutting interest rates, most likely with one cut in September, with the possibility of two cuts in September, and then a couple more by the end of the year. probably. And, that's seen as a kind of a glide path rather than a slamming on of the brake in order to lower interest rates without having to panic or anything like that. Now, the thing is, it's that labour data, right, which is the problem. It was a lower than expected figure that we saw at the start of this month. And that set hearts racing somewhat about the possibility that actually, the Fed is moving too late or too slow, and that the US economy is already slowing much faster, at a much more worrying pace. And if that's the case, then maybe the Fed will need to cut interest rates much more aggressively.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.